I think what happened was extremely bullish for gold, and I think the big move is going to be higher. I think the next rally will take out 2,600. Same thing with the dollar. Dollar made a new low for the year on the yen, almost took out 140. We did take out 84 cents on the Swiss franc. We closed back above it, but that was a new 13-year low today in the dollar against the Swiss franc. So, the dollar is slowly starting to break down. The pace of that breakdown is going to pick up now that the cat is out of the bag. We've had this 50 basis point rate cut, and we've got more rate cuts coming, right? So the dollar is going to go down, gold is going to go up.
Economist and gold advocate Peter Schiff shared his insights on the social media platform X following the Federal Reserve's recent decision to cut interest rates by 50 basis points. He remarked, "As expected, the Fed caved to the markets and cut interest rates by 50 basis points." He elaborated further, stating that this round of rate cuts would not prevent a cooling economy from entering a recession. Instead, it would exacerbate inflation, worsening the recession's impact. In a subsequent post, Schiff noted, "Not only did the Fed's 50 basis point rate cut send gold to a record high above $2,595, but it also caused the US dollar to sink below 0.84 Swiss francs, marking a new 13-year low." The precious metal has demonstrated an impressive bull run since the beginning of 2024, with its value reaching multiple record highs throughout the year. This upward trajectory began in early March, when gold prices surged to $2,160 per ounce, an increase of 8% over the previous record set in December 2023. Subsequent peaks were reached in April, May, August, and most recently on September 16th, when prices climbed to over $2,584 per ounce. As a result, gold has experienced a remarkable increase of 25% since the start of the year. In the immediate aftermath of the rate cut, the markets initially responded positively, with gold prices showing notable gains. However, this upward momentum proved to be short-lived. As Fed Chair Jerome Powell commenced his press conference, some remarks were considered hawkish. He emphasized that the Fed would maintain a data-dependent approach, indicating that future rate cuts were not guaranteed. This cautious communication led to a reversal in market sentiment, prompting investors to reassess the implications of the Fed's policies. While the rate cut was initially viewed as a bullish signal for gold and other assets, the subsequent market reactions underscore the complexities. Investors must remain vigilant and adaptable as the economic landscape continues to evolve. We will present clips from Peter Schiff's interview. But before we do, if you want more videos like this, please hit the subscribe button and turn on the notification bell for more updates. Thank you, and enjoy the video.
The markets initially rallied, the stock market rallied. Gold, as soon as the announcement came out that it was 50 basis points, gold rallied and then rallied again. It didn't take out 2,600. It did make a new all-time record high. We got above 2,595. And the gold stocks had a big rally initially. So the GDX and the GDXJ both hit new 52-week highs earlier. But then when Powell started to speak, and some of the things that he was saying was interpreted as being, hawkish, like he talked about how strong the economy is. But what did they expect? He's not going to acknowledge that the economy is weak. When asked specifically about the balance of risks, if they had tilted to employment over inflation, Powell said no. He said that it's basically neutral, that the Fed is equally worried about inflation and employment. So it's not that it's more worried about unemployment, but that was a lie. Of course, it's more worried about unemployment. That's why it's cutting, because the idea that they're tight is nonsense. They're still loose. And so they're cutting because they need to be looser for a lot of reasons. One of them is employment. But I think when Powell said that, that kind of spooked the markets. Also, Powell said that, hey, don't expect, just because we cut 50 basis points this time, we may not cut 50 next time, right? And we may not cut it all next time. We're still playing it meeting by meeting. We're data dependent, going back to that. Even though all the people who fill out these dot plots, they're all projecting more cuts. Powell didn't just come out and say, yeah, we're cutting again. We're cutting next meeting. We're cutting the meeting after that. He kind of, claimed that, well, we're still data dependent. So you never know. If we get some bad inflation prints, we may not cut. Hey, we may even hike, right? So he left the door open. And so I think that, took away some of what he had given. And that's one of the reasons you saw reversals in the markets, including the fact that, it's a buy the rumor, sell the facts. So you get traders taking profits. So the market sold off and went negative. It wasn't a collapse, but they lost the gains. Gold reversed, closed negative on the day, maybe about 10, 12 bucks. I think at its highs, gold was up maybe like $25, something like that. So the gold stocks, which were up 3-4% on their highs, ended up down about 1%. So a lot of profit taking as a result of the press conference. But I think that's just a one-day event. I think what happened was extremely bullish for gold, and I think the big move is going to be higher. I think the next rally will take out 2,600. Same thing with the dollar. Dollar made a new low for the year on the yen, almost took out a 140. We did take out 84 cents on the Swiss franc. We closed back above it, but that was a new 13-year low today in the dollar against the Swiss franc. So, the dollar is slowly starting to break down. The pace of that breakdown is going to pick up now that the cat is out of the bag. We've had this 50 basis point rate cut, and we've got more rate cuts coming, right? So the dollar is going to go down, gold is going to go up, and so this was just an opportunity. This late day sell off is another opportunity. So if you didn't buy more gold before the Fed cut 50 basis points, you can still buy it tonight. You can still buy silver. Silver, is still above $30, but, it's below 31. It had gotten above there. But silver is a good buy right now. Hey, hold on. So you can call up Schiff Gold, buy silver. Again, you can buy tonight. You can buy as soon as the podcast is over.
Inflation has notably declined since its peak in summer 2022. But many consumers still struggle with high prices for essentials like groceries, fuel, rent, and travel. As millions of Americans gear up to vote in November, the economy and its future direction have become critical issues in the presidential campaign. The Federal Reserve's recent decision to cut its benchmark federal funds rate from 4.75% to 5.00% represents a significant shift in its inflation strategy. Fed Chair Jerome Powell stated that the time has come for this action, emphasizing confidence in the ability to maintain labor market strength while aiming for moderate growth and a sustainable reduction in inflation toward the target of 2%. Despite some optimism, Powell has refrained from declaring victory over inflation. When asked if the Fed has successfully addressed the issue, he did not confirm this, which raises questions about the confidence underpinning the recent 50 basis point rate cut. This caution suggests an ongoing uncertainty regarding inflation trends. Historically, the Federal Reserve has adopted a reactive stance on inflation. For example, when inflation surpassed the 2% target, Powell indicated that the Fed would refrain from preemptive action, allowing inflation to rise further before responding. Many market observers anticipate a more consistent strategy whereby rate cuts are only considered once inflation is controlled.
I do believe that the economic data that is going to be coming out in the weeks and months ahead is going to be negative data. It's going to be negative on the economy, negative on manufacturing. They're going to have some negative jobs numbers. And the stronger inflation numbers may not show up for another few months, right? I mean, they may come out around where they are. And so as long as inflation isn't getting worse, right, the Fed can ignore the data because the Fed is already confident, right? They're saying we know that inflation is going to go back down to 2%, although Powell was careful not to say mission accomplished because he actually said that. There was one of the reporters that asked, would you say you've won the inflation fight? And Powell said no, which kind of contradicted what he said earlier about the confidence he had. And that's why he cut by 50 basis points because he was so sure that inflation was going down to 2%. But then he later said, well, we're not sure. And so we're not going to say mission accomplished Well, then if you're not sure, why'd you cut by 50, right? So nobody really asked that. But I think he was afraid to say mission accomplished because, it's probably not accomplished. So he came out with that. And so that might have also been a negative for the market. Maybe the markets were waiting for him to say, yeah, mission accomplished. Although from my perspective, he basically did that with the 50 basis point rate cut. But again, remember, when inflation was below 2% and rising, Powell never raised interest rates to get ahead of inflation. Say, look, we can see it's going up, so we're not going to wait for 2%. We're just going to start hiking now before we get there. No. Powell actually said, we're going to let it pass 2%. Right? Even though our target is 2%, we're not going to start hiking at 2%. We're going to let it get above 2% before we start hiking because, we want to average out inflation, right? We have this inflation averaging now. So we're not going to rush, right? We're just going to, let inflation move above. Well, they have the complete opposite attitude on the way down. If the Fed was consistent, the Fed would say, we're not going to start cutting rates until inflation is below 2%. And in fact, what Powell should be saying is, we were above 2%. We were way above it. We need to average that down. We need to have inflation run below 2%. And if the economy really was as strong as Powell claims, why not? Why not let inflation be below 2%? We got this great economy. We got this super strong labor market. Why not have 1% inflation? I mean, wouldn't that be a relief? Although that's still higher prices. But no, Powell knows the economy is so weak, he can't wait for inflation to actually get down to 2% or, heaven forbid, go below 2%. He needs to start cutting now, and he's just going to roll the dice and hope that inflation keeps coming down. But why should it? He's throwing gasoline on the fire. Why should the fire go out when he's now stoking it?
Gold prices are projected to sustain a bullish trend, with critical resistance at $2,649.43 and $2,660.90. A weaker dollar and expectations for another rate cut create a favorable environment for gold investors. This combination may enhance demand, positioning gold to potentially breach these key resistance levels in the near term. What do you think about Peter Schiff's bold warning and the Federal Reserve's recent actions? Let us know in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Until next time.